Welcome back, MTG Crypto Tribe. Bitcoin's recent breakout to a new 52-week high is an exciting development that led to a current 22% gain in the Morpheus crypto portfolio since our October 17th buy entry, which occurred on a pullback after Bitcoin broke out above a tight consolidation. Now, Bitcoin is forming a bull pennant pattern on the daily chart and is poised for a potential breakout to another fresh 52-week high. So, as usual, we will continue to trail the stop higher to maximize gains and will remain long as the bullish price action continues. But while Bitcoin has been hitting these impressive highs, Ethereum has been quietly pacing itself. Why, you ask? Well, it's a common phenomenon in the crypto space. During the early stages of a new bull cycle, money typically flows into Bitcoin first. It's kind of like the grand opening act before the altcoins take the stage. And guess what? We've got some intriguing news. In this video, we're shifting our focus solely to Ethereum because it's a reliable indicator of the broader altcoin market's health. Check out the daily chart of Ethereum, and I'll tell you, here's the scoop. Ethereum might have lagged behind Bitcoin, but it's just made a groundbreaking move. Ethereum has surged above a critical resistance level, its 200-day moving average. Notice how this yellow line, the 200-day moving average, has been a pivotal level over the past year. And now Ethereum has just moved back above that resistance level. So this shift in character is a major deal, and it could very well signify the dawn of a brand new altcoin bull market. So don't miss out on this crucial crypto insight. Join us in this video as we dive deep into Ethereum's exciting journey and uncover what it means for the entire crypto space. So whether you're a seasoned trader or you're just starting your crypto voyage, this video is your ticket to staying ahead of the crypto game. So hit that subscribe button, ring the notification bell, and let's go ahead and dive in to navigate the crypto waters together. Let's start by comparing the recent performance of Ethereum with Bitcoin. This is two daily charts here. On the left side, you have Bitcoin. On the right side, Ethereum. And the yellow line is what I want to call your attention to. This is the 200-day moving average. The 200-day moving average is a reliable and powerful long-term indicator of trend. When an asset is trading above the 200-day moving average, it generally could be said that there's a long-term uptrend. And if the asset is trading below the 200-day moving average, then could be considered to be in a long-term downtrend, depending on other factors such as moving average crossovers as well. But taking a look here, we can see that Bitcoin has been showing relative strength to Ethereum because it recovered above its 200-day moving average well ahead of Ethereum. Let's go ahead and draw this rectangular box, which makes it easier to see that. So this yellow line here, notice that Bitcoin moved back above it on October 16th was the day it reclaimed its 200-day moving average. And we actually bought Bitcoin the very next day on the first pullback that touched the 200-day moving average, because prior resistance becomes the new support after we move above the resistance. So that was a relatively low risk entry point for us. And we're currently showing a 22% gain on that trade, and we continue to hold. But let's take a look, and we see Ethereum on that same day, October 16th, had remained well below its 200-day moving average. So just to compare, this was the same day in Ethereum right here, October 16th. And actually notice that day that Ethereum tried to get back above only its 50-day moving average and failed and stalled. So you can see that Bitcoin was leading Ethereum with a move above its 200-day MA and then rallied sharply to a new 52-week high about 2 weeks ago. Ethereum was lagging and showing relative weakness, so we focused primarily on Bitcoin until recently, when we started making some big altcoin trades that led to huge winners such as Link and Sol, and we'll have some separate videos to walk through those trades as well. But taking a look at Ethereum in the current state, we can see that it moved back above its 200-day moving average about 2 weeks ago. And it's been choppy since then. We can see the long tails, long wicks on these candlesticks, which means there's been a lot of indecision. But the longer Ethereum holds above its 200-day moving average and forms a short-term basic consolidation, the more likely the price action will tighten up, which could lead to a significant breakout in the coming weeks. Now let's go ahead and focus our chart only on Ethereum, and we can take a look at some key levels that you want to be aware of. First of all, we see that Ethereum, one of the reasons that it started to rally was obviously Bitcoin's relative strength drew the rest of the crypto market higher. But additionally, from a technical level, we also formed a double bottom right here around the 1530 level. We can see a double bottom that formed right before Ethereum started to rally. And so that's obviously a major support level for us there, that double bottom. But we've got much more significant support levels to be aware of if we do see a short-term pullback in Ethereum. First of all, the 200-day moving average is now at 1778. And any pullback to that level in the coming days here could present a relatively low risk entry point with a high risk reward. We've also got the 8 and the 20 and the 50-day moving averages all rising up now. The 8-period exponential moving average has just crossed above the 200-day moving average, which is a bullish signal of short-term trend. And notice how the price has been rising. In fact, if we hide the 200-day moving average, you can see a little bit better here. Notice how the price has recently come into the 8-period exponential moving average support, and that's been holding firmly as support over the past week. So that's a really bullish sign when the price of an asset holds above even the 8-period exponential moving average without a dip below it. Now, as for resistance, we want to draw your attention to this trend line that's formed from the high of April of this year. Notice that we're still below this trend line, and Ethereum is going to make a test of this trend line if it breaks out above this consolidation range. So currently that downtrend line resistance is right around the 1880 level and sloping lower. So if we do get a breakout above this range, we want to keep an eye on the price action as it tests resistance of this downtrend line, because that could be another reason that traders sell into strength of a potential move. So we want to be aware of that. However, if the price action breaks out above this downtrend line on high volume, then we could look for the first pullback to that downtrend line to act as support. So definitely keep an eye on this level, again, right around 1890 at the moment. So kind of a very pivotal level for Ethereum here, but the recent price action is bullish and holding above the 200. And that's what I really want to focus your attention on, actually, is we're going to go ahead and remove all these drawings so we can really focus your attention just on the 200-day moving average. We talk about the 200-day moving average a lot. In fact, we just made a YouTube video where we talked about the S&P 500 in the stock market has just sliced below its 200-day moving average. And it's interesting because it fell below its 200-day moving average as Bitcoin and Ethereum recently moved above their 200-day moving averages. So we're seeing convergence, or divergence rather, bullish divergence in the crypto market with money potentially flowing out of stocks and into crypto. But taking a look at this 200-day moving average, the yellow line, notice how over the past couple of years, that level has acted perfectly as a pivotal support resistance level. So this is a daily chart, and we're going back, you see at the bottom here, 2021. So we're actually going back about 3 years to look at the price action here. And we see that during the 2021 bull market, when the market got overheated and cooled off, it's the 200-day moving average that acted as support. We had an undercut, a dip below it for a couple of days. When that commonly happens, we get the undercut, but the support did its thing, and that prompted another rally to slightly new highs in Ethereum. And notice here, 1, 2, 3 points we acted as support. But here's where it all changed. In January of 2022, we entered into the crypto bear market. So the 200-day moving average that was formerly acting as support became resistance. Again, prior support becomes resistance once that support is broken, and vice versa. So after we broke below that 200-day moving average, about 4 months later, in April of 2022, we attempted to get back above that 200-day moving average, but notice how perfectly it acted as resistance. The support became the resistance. And we trended lower throughout the 2022 bear market, stayed below the 200-day MA, tried to get back above it with a bounce in November of last year. And again, the 200-day moving average acted as resistance. And finally, we popped back above it in January of this year when the crypto market and the stock market both formed bottoms of their 2022 bear markets. And since Ethereum got back above the 200-day moving average, notice how it's become support. It acted as support in March of this year when we pulled back. Notice how that 200-day moving average went from neatly acting as resistance to neatly acting as support. Then we rallied to a new high in April of this year, pulled back, and again notice how the 200-day moving average perfectly acted as support. Prior resistance becomes the new support once the resistance is broken. Now, in August of this year, we sliced back below that 200-day moving average, and look how vicious the selling pressure was once we sliced through that 200-day moving average. It just kind of shows how pivotal this level is and how closely followed it is by traders and investors. And we sliced through that 200-day moving average, which instantly made that become resistance. And we stayed below that 200-day moving average for the past several months, all the way up until the past week. And now Ethereum is reclaiming its 200-day moving average. So if we can close the week above this 200-day moving average, then that could signify a significant change in market character. It's a big deal. And the chart kind of proves that. This isn't just theory or what we think. This is what we know based on what the chart is showing us. And we always trade what we see, not what we think. And you can see here that the 200-day moving average clearly is a pivotal level for Ethereum. So pretty exciting if you're a crypto trader, because if Ethereum holds above this 200-day moving average, it could definitely spark a new altcoin bull market. Now, in Morpheus Crypto, we recently entered Ethereum after it moved above its 200-day moving average. So we joined Bitcoin in showing a profit on that trade. And if you're not yet in Ethereum, if you missed our entry or you're not a subscriber, then you could look for a potential pullback, short-term pullback, again, to the 200-day moving average with the 8-period moving average right around the 1780 area. Could present a relatively low-risk entry point. If we dip below that, then we've got the rising 20-period exponential moving average currently at 1725. That would be an undercut shakeout scenario. And we could look to find support from these prior highs. The prior resistance levels of these highs right around the 1750 area should now act as support. And you can see that's exactly what happened when Ethereum first popped above its 200-day moving average. The first pullback, we zoom in here a little bit, you can see the first pullback right here. Notice the low of that marked the highs of the prior breakout level. Again, prior resistance becomes new support. But a one-day dip below that level, an undercut would be okay if the price snaps back above it. But what we're seeing here more than a pullback scenario is we're seeing a correction by time where the price is trending sideways. And a correction by time means that rather than the price pulling back and retracing from its highs, a correction by time simply allows the moving averages to rise up and provide support while the price action moves sideways. And a correction by time is even more bullish than a pullback, which would be known as a correction by price, because a correction by time means that the sellers are not stepping in as soon as the bulls take a rest. So the price action of Ethereum and Bitcoin both looking very solid and creating a lot of new opportunities. We'll be back soon in another crypto video to give you a follow-up on our 4th trade entry into SOL. In case you missed it, check out on our YouTube channel our recent video how SOL led to a 58% gain in just 2 trades in a matter of weeks. Also, Link had a 25% gain, and both of those cryptos we re-entered and have locked in gains in the portfolio. And we'll make some follow-up videos for educational purposes so you can see how we continue to manage those leading altcoins. But in the meantime, we may see the action shift back into the big boys, Bitcoin and Ethereum, because some of the leading altcoins are due for a bit of a pullback or consolidation. So we'll keep you up to date here. Stay tuned. And if you're new to Morpheus Crypto, head on over to morpheustrading.com and click on Crypto Picks, and you can get started with receiving the top crypto swing trade alerts direct to your mobile phone. And we'll see you back here in our next Morpheus Crypto video.